Welcome to The Explainer. So today we're going to break down what happened in the Indian stock market on August 25th, 2025. And believe me, there's a really fascinating story hiding just behind the numbers. So on the surface, that headline number, it looks pretty good, right? The Nifty 50 index is up, and you'd think, okay, a solid, positive day for investors. Pretty straightforward. But was it really a good day for everyone? Well, that's where things get interesting. Let's really dive into this, because when you look a little closer, you'll see this incredible battle going on. Two huge opposing forces that tell a way more complex story. All right, first up, let's talk about the big force pushing the market up. And what's wild is that the main reason for the rally, it didn't even come from India. Nope, it came from thousands of miles away, all the way from the United States. So, the big news was all about the U.S. Federal Reserve. They used what analysts call dovish language. And all that really means is that the central bank is dropping hints that, hey, they might lower interest rates soon. And for the stock market, well, that's usually music to its ears. Now, the really important word here is hinted. See, Fed Chair Jerome Powell, he didn't come right out and promise anything. But just this suggestion that a rate cut could happen, man, that sent this massive wave of optimism all around the world, starting on Wall Street and washing right over into Asia. And you can see the ripple effect of that optimism right here. Just look at India's IT sector. It absolutely surged, jumping over 2%. It's pretty simple, right? These companies make a ton of their money in the US, so when things look good over there, it's fantastic news for them. But okay, for every push, there's a pull, right? And that powerful global push was met by a really strong pull in the other direction, this one coming from worries right here at home. This is the thing that really put the brakes on the rally. And the big issue here was basically a ticking clock. Everyone, was watching this looming deadline for possible U.S. tariffs on Indian goods, and it was just 2 days away. That's a lot of pressure. So naturally, this created a ton of uncertainty. Nobody really knew what was going to happen. And you have to remember, when big institutional investors get nervous about something like tariffs, their motto is often sell first, ask questions later. That kind of caution, it just puts a heavy lid on everything. So you've got this global push and this domestic pull. What happens when these two massive forces crash into each other? Well, you get a market that's completely split right down the middle. It was a classic tug of war. On one end of the rope, you have all this optimism about U.S. interest rates, which is lifting up sectors like IT, and on the other end, you've got this fear about tariffs that's just dragging everything else down. And if you want to see who was really winning that tug of war, you just need to look at one number, 2,239. That's the number of stocks that actually declined, even while the main index went up. It tells you everything, right? The feeling on the ground was way weaker than that headline number lets on. So what you have is a rally that wasn't really broad-based at all. It was super narrow. Basically, a few big-name companies in one sector were holding the whole index up, while most other stocks were, well, they were being left behind. And this tale of two markets, it gets even clearer when you break it down by sector. You see IT just soaring because of that good news from overseas, but then you look at sectors that are really focused on the domestic economy, like banking and FMCG, they were actually in the red. That shows you exactly where all that fear and uncertainty was living. All right, so where does all of this leave us? Well, if you're looking at the technical charts, it leaves us at a really tense moment. The market is just holding its breath, perfectly balanced, waiting for the next big move. What we saw was the formation of something traders call an inside bar pattern. And all that is, it's the market's way of saying, okay, I'm taking a pause here. It's a day of indecision where the market is basically coiling up like a spring, getting ready for a potentially huge move. So now, we've got these really clear battle lines drawn for the market. Think of it like a floor and a ceiling. You've got the floor, or the support, down at 24,800. And you've got the ceiling, the resistance, up at 25,150. Whichever way it breaks out of that range, well, that's probably going to be the market's next big move. So what's the big takeaway from all this? It's that the market is balanced on a razor's edge. That simple, positive headline number was hiding a huge fight just beneath the surface. And it leaves us with one massive question heading into tomorrow. Which side is going to win this tug of war? The global push or the domestic pull?